Climate change is in the news. International leaders, including President Obama, have been meeting in Copenhagen. Here at home, Congress has several initiatives under consideration. Media talking heads are debating what should be done, if anything, and the costs. But it's not just an issue for presidents and pundits. The insurance industry is very much in the middle of the debate over climate change as well, as evidenced by the activity at the recent meeting of the National Association of Insurance Commissioners in San Francisco. Private insurance industry representatives met with insurance regulators and other policymakers to discuss climate change, from the science behind the phenomenon to protecting coastal properties to ensure investments and innovation. Pennsylvania Insurance Commissioner Joel Ario has been among the leaders helping the industry and fellow state regulators understand the issue and why it is or should be of importance to the insurance industry. To Ario, if there's any group in society that's more worried about climate change than the environmentalists, it would be insurers, because they are on the front lines of the risk.
Well, if you think about what insurers do, they take on risk from people. And so insofar as climate change is an issue that's posing a number of very difficult and challenging risks to us as a society, insurers are right in the thick of that, helping people address it and helping take some of that risk. So it's really an opportunity for the industry, if it's well handled, to provide people with the kind of products they need to address the risk. It's also could be a real problem for a company that doesn't properly address the risk and ends up with a lot of losses that they hadn't anticipated. So if you think about who's worried about climate change in the society, clearly the environmentalists are very worried. That's what brings them together. Insurers are like the environmentalists. They're very worried about it because they're where the rubber meets the road on this risk, and they're the ones that, if it's not properly mitigated and then adapted to, will bear a lot of we'll see a lot of challenge to their business.
The most obvious and immediate challenge to the insurance industry and regulators from climate change involves coastal properties, managing the risk and making insurance available for these properties. But it's really a much broader challenge than the coast, says Ario.
Well, that's just an example, I think. That's probably the one that comes to people's minds most quickly on where are the risks of climate change, because everybody hears the reports of glaciers melting and warming of the seas and the rise of the sea level, and so raises a lot of questions about property that's along the coast. And that already we've seen some real challenges for the insurers there. But I think we've seen the cycle. First, we see insurers trying to get away from that risk, avoid it if they can, but then the regulator and some of their competitors come in and say, no, we'll manage that risk better because we want that business. And so you see innovative ways of trying to address that risk. That same kind of thing will play out with drought in the Midwest or wildfires in the West, or potentially pandemics, health pandemics related to issues of climate change as well. So there's a number of ways in which this risk is going to play out over time, but that's one that already is starting to play out in some arenas.
Over the past few years, state regulators have stepped up their monitoring of how insurers are dealing with climate change issues. About 4 years ago, Washington Commissioner Mike Kreidler and former Nebraska Commissioner Tim Wagner assembled the first climate change and global warming task force.
And over the last 3 or 4 years, the insurance commissioners have effectively injected themselves into this discussion from the standpoint of now having a requirement for the insurance companies to answer key questions about how they are handling their investments and how they are dealing with climate change. This is an aggressive step. It's a progressive step on the part of insurance regulators, one that we're now seeing mimicked by the Securities Exchange Commission for the rest of corporate America. So we've actually pushed the insurance industry, which is appropriate given the nature of the kind of risks that they're investing in and insuring from property casualty insurers' standpoint, that they in fact should be at the forefront of helping us to identify where we can do better.
Regulators are interested in not only how insurance companies are handling the insuring of property risks, but also in how their own financial condition might be affected by their investments in an age of climate change. This also includes interest in what they are doing to reduce climate change losses going forward. Kreidler explains the angles regulators are pursuing.
Well, there's almost kind of two different parts of it. One of them is certainly where insurance companies place their investments and what kind of investment activity they're engaged in. There's going to be some that are going to be potentially more risky because of the impact of climate change. We as regulators need to know where it's risky and to make sure that we are appropriately directing the companies to make sure they have safe and sound investments. The second part is their insurance activity of how they insure property, which is their business. And we want to make sure that when they make their decisions, they're based on taking into account all of the different kind of potential risks that they face with climate change and global warming. But in addition to that, that they're not just looking at walking away from a market, are looking to how they can best adapt their insurance practices to a changing market so they stay in that market, but also can help direct that market to better activities that are going to help us to mitigate, reduce their exposure by certainly building codes and other types of standards that would be in place. And on the other side, what they can do to help lessen the increase in climate change by virtue of different kind of activities, commercial activities.
Kreidler and other regulators are watching one insurance activity in particular that promises to help mitigate losses by changing behavior, and that is user-based automobile insurance. Premiums are linked to where and how many miles customers drive. Those who drive less save on their premiums. Kreidler says regulators must not get in the way of innovation, even while making sure new green products are legal and deliver the benefits promised. Insurers are already test driving pay-as-you-drive policies in a number of states, including Carlin, California.